Hello, everyone. Today we have Elena Thomas. Elena Thomas is from OptionTrax. Elena, welcome to the show.
Thank you for having me. I'm really happy to be a part of this program.
So, Elena, just a brief background about yourself before we start discussing OptionTrax in detail.
Sure, sounds good. So I'm the Chief Operating Officer of Plan Management Corp, the publisher and operator of OptionTrax, which provides a suite of software and services to entities issuing shares to manage their equity that they're issuing as a form of compensation. And for those companies that are still privately held, to manage their cap tables as well. And I came to this role because it was actually a great combination of things that I've been doing previously in my career, specifically doing large software design and client engagement projects at a global IT company called CGI. And then as a consultant and project manager with McKinsey and Company, where I was working in projects around financial inclusion, so access to financial services and technologies for the and underserved communities and entities, and also the use of finance for projects such as global health and sustainable development.
Got it. So, since our podcast is like 15 to 20 minutes, let's kind of like deep dive into fast track into things. When it comes down to option tracks, the problem option tracks is trying to solve, especially when it comes down to SME, and then, we'll build up the conversation from there.
Sure. So, one of the things that's appealing to me about the space where OptionTrax plays is that, particularly for SMEs, equity is an incredibly powerful tool for them to be able to leverage to, attract and retain talent, motivate people, make them owners, particularly where it's a cash-strapped environment. So a lot of heavy capital investment companies like biotech, like technology, where they're churning a lot of cash, but they still want to be able to attract and motivate talent. And then, of course, also leveraging that ownership equity is an incredible way for these companies to also gain access to capital, right? Whether it's through a private placement or an IPO, it provides them an avenue to finance to continue to grow the company in those periods of time, which historically we've seen SMEs can really struggle to get access to finance.
True. So, in the last few months, one of the players in the market doing something similar had some challenges, and it's all public news, which we all saw on LinkedIn, media, and stuff.
Yeah.
So, do you want to discuss around that and, steps at option tracks and something like that?
Sure. I think at a high level, one of the big challenges, I think, for fintech in general, and I actually had written some blogs on this a few years ago, is making sure that the finance aspect is still always front and center over the tech aspect. One of the things we'd seen in the last decade was an incredible amount of funding poured towards financial technology and this very rapid development. And a lot of it came from this West Coast Silicon Valley environment where technology was really the forefront. And frankly, I think historically some of those traditional financial controls were maybe not as well put in place as you saw in traditional financial environments. And one of the things that is critical to fintech going forward, I'm sure we'll touch on trends and things, is that data protection and privacy, across Europe and now certainly increasingly in the US, even state by state, you see a much stronger focus on what's happening with this data, how is it being used. And in this case, there was a provider where they were actually reaching out to privately held, non-disclosed shareholders of issuing companies to solicit them to sell shares. So, this frankly is a large breach of trust. And one of the things fintech has just gotten to a study put out by McKinsey this year showed fintech has really just gotten to the stage where they have the same level of trust from general consumers as traditional banks, which is a great milestone, but something we really need to be careful about protecting. So, one of the things at OptionTrax, we are compliant with all GDPR regulations, global data privacy rules, and are very strict about ensuring that we are not accessing our clients' private financial investor-based data for anything other than the services for which we have been contracted by that company.
Interesting. And I read a few articles around this. There's been a lot of discussion around implementing blockchain around this, but I don't know how would that come in. So, want
Yeah,
to shed some lights on that, or we can move to
sure.
SPACs?
So I think that's a really interesting innovation that's going to continue to come into the space, but is one that now, again, I think the technology may be a little bit ahead of the ecosystem and the uses, right? So blockchain is this incredibly powerful technology where we can have distributed views of, for example, in this space, company ownership, where all those records are out there. They can't be tampered by an individual. But really, the power of blockchain for the financial industry is going to require the whole ecosystem to move to blockchain, right? So when you're talking about automated contract execution and maybe the interplay and things between share registrars and brokerage houses and the company's records, making sure that all of those things line up, taking out the middlemen and making the processes a lot more efficient. I think there's a lot of exciting opportunity down the road, but it's something where you really need, again, kind of that full environment to move to the blockchain before you can really get, I think, the highest value benefit out of it. Having a single player track one thing on the blockchain in and of itself isn't going to change everything, but of course, it's a step in the future direction of where we're likely to see that go.
Okay. So, we always have this what I call the curveball question that kind of like comes in while you kind of like building up. So 2021, 2022 early half, and the SPACs and the roles of platforms like OptionTrax, and because market was like, we all know how the market was behaving, like,
Yeah.
every other day you had a SPAC coming out, or every 3 days. So do you want to discuss those times and maybe compare it with 2024, since
Sure.
you would
Yeah.
have an
So
idea with it?
Yeah, so of course, it was incredibly high activity time. I think one of the things, again, this was kind of the tail end of a lot of investment funds being poured in, a lot of public funds going into new financial technology companies and just new technology companies. I think unfortunately, a lot of companies you've seen who came out during that period, their stock price has not been sustained. There's been a significant decrease in the value of a lot of those companies that SPAC during that time. I don't think SPAC is going to go away. And certainly on the IPO, we're starting to see some activity coming again. Of course, these are great tools, again, for companies to raise the next level of funds. I think one of the things, though, that we did see going from 21 to into 3 and 4. So at OptionTrax, we also work with a lot of long-term private companies, a lot of mid-sized public companies, and their need to manage these types of tools, who owns what, leveraging equity as a compensation form, did not go away even when the market decreased. So we actually found, particularly for our company, where we are not a brokerage firm, frankly, we're not a bank, we're not trying to make
Yeah.
our primary income off of our clients' IPOs. We found that it was really a pretty kind of recession-proof business in terms of companies still needing, and sometimes in a cash-strapped environment, needing more to leverage their equity to do these things. And I think that going forward, one of the challenges for fintech and all companies is that these funding sources have tightened their belt. And I think you are going to see more of a push towards what is a actually sustainable business model that doesn't require these incredible financial churn numbers to keep growth going, right? And back to a little bit more conservative, cost uh, basis and sustainable growth avenues that can weather, not only the great market times, but also the slower and more recession-driven eras as
Hmm.
well.
Got it. So my last question would be around, you know, around the challenges. And when I talk about challenges uh, from, giving access to these private companies globally, because with the what we're seeing in the last couple of years, a lot of Middle Eastern as well as Far Eastern VCs are gaining more and more interest
Mhm.
in the startup space out of the Valley or Big Apple, so getting that kind of accessibility. I know with the US, the ecosystem is very stable and strong, but the challenge is going cross-border and those kind of things. Do you want to shed some light on that?
Yeah, I think, one of the things that has been impressive is the adoption of fintech tools and technology in emerging markets. They've grown incredibly and they're expected to continue growing, particularly when you're talking about out of Asia, Africa over the next, decade or so. And it's not surprising, right? In those spaces, a lot of your retail finance really leapfrogged, as they say, traditional methods and went right to technology-driven tools like mobile payments, mobile banking. So one of the things that obviously is a trend that will impact everyone, but also fintech, is AI, right? And one of the great opportunities for AI in the fintech space is lowering the cost to serve so that you can help in economies and countries perhaps where historically for small and micro enterprises and even individuals, the cost of using standard B2B financial tools was too high or the overhead didn't work. AI provides tremendous opportunities to streamline operations, increase scalability and productivity of these fintech tools, and also provide access to the data, right? One of the other reasons why SMEs historically didn't have as much access to finance and fintech is because there wasn't the data for companies to feel comfortable that they were making a good investment in those particular economies or with those particular companies. And that's another area where there's incredible potential, right, for AI to be leveraged on these new data sets coming out of these new markets to help companies make a decision that they can feel comfortable either investing in these companies or taking them on as a client. And I think that provides a lot of potential. Of course, there's, with that, one of the challenges for financial technology will be responsibly applying AI, right? And I think you'll see
True.
probably a lot of vertically specific AI need to come out for the financial industry. I think they're going into like an open AI for financial technology use is probably something that would be fraught with a lot of trust and data security issues. But I think clearly, you're going to see it increasingly specific to certain financial use cases, and that will really just broaden the reach of these tools across markets.
Got it. So last question. I know I said the last one was,
Yeah,
but
sure.
you brought up the SMEs and you also talked about the SPAC market picking up. So, any kind of advice you would give to mid-sized companies that are maybe Series B to D, hanging there or something like that, in kind of because having those kind of insights,
Yeah,
so how you see the
sure.
markets evolving. So any kind of advice.
Yeah, and I certainly, won't put out to be any market guru in terms of what's going to happen in the future. But I think the big thing I would say for companies that are considering a SPAC or an IPO, along with all the basics of course, you have to really have your house in order. That's a lot of the work we do is helping companies prepare for that from a disclosure and equity management side. But what happens after, right? So I think historically we had seen a bit of a rush to just IPO to raise that capital. But the problem is, if you have a churn rate that's going to require that to continue, unfortunately, you're going to end up where we've seen a lot of companies where, your numbers aren't going to support that. Your stock price is going to be depressed. And then you're going to really have trouble following up with additional financing. So, there are a lot of other tools out there. SPAC and IPO are certainly a great model for certain companies, but I would say, stop, take a step back, look at what your long-term plan is in terms of funding and churn, and is this really going to be something that is good for the company and employees, by the way, right? One of the big things about equity that's wonderful is a chance to build wealth for your employees. If you go public and your stock price tanks, unfortunately, so does a lot of that wealth building for employees. So, take a step back and look, is this really the best way for you to raise funds to build the long-term growth you need? Or is it just a quick one-time thing that you're going to have trouble sustaining? And make sure that you're thinking about that from a long-term strategic view before you rush into doing something that's very hard to unwind in a sustainable way.
Got it. Got it. Okay, Lena, thank you so much for being on our show. And,
My pleasure. Thank
we're
you for
going,
having me.
thank you.